Today on Finance in 5, the S&P TSX fell 76 basis points, making a total month loss so far of about 5.5%. As markets rose significantly yesterday, they didn't quite do as well today, as more concerns are still going forward. And it doesn't seem like that the possible bottom last Friday was the bottom, as stocks may continue to fall. Overall, it's hard to say. The S&P 500 fell a staggering 2.82% on the day, making it a month loss of 7.57%. As it went up over 4% yesterday, a decent amount of those losses have just come today, as this puts more concerns on the stock market going forward. The Dow also fell, falling just under 3%, making a month loss of 8.75%. The Nasdaq fell just under 3% as well, making a month loss of 6.35%. In Europe, the FTSE was actually had a decent day, going up 95 basis points. Though on the 5-day mark, it is still down 3.64%. The Nikkei didn't do quite as well and actually fell 1.22 basis points, making a 5-day loss of 5.75%. WTI continued with its rebound, but only going up 1.1%. Gold had actually a really good day, going up 2.65%, but it still is slightly lower than the highs we saw last week. But overall, investors are seeing it as an option. Yields continue to fall. With the fall in the stock market, a lot of money continues to go into treasuries. As you can see, a lot of US treasuries have actually fallen significantly farther, with the 2-year and 5-year at 65 basis points and 69 basis points respectively. And that 10-year has actually fallen below that 1% level I was talking about before, as many have expected. But I didn't expect it to quite fall to 94 basis points, and it might continue to fall, but we'll have to wait and see. Canada has also taken a hit, as the 2-year, 5-year, and 10-year all fall below that 1% level. In the currency markets, the CAD had a really rough day, falling about 75 basis points for most currencies. The USD also had a really rough day, just not as bad as the CAD overall. The Chinese yen also had a rough day as well. On a positive note though, the Japanese yen turned around from that rough day previously, had a pretty strong day, as well as the Australian dollar. The euro and the pound were also slightly up. Big news in the United States today, with the Federal Reserve announcing a surprising interest rate cut of 50 basis points. This was an impromptu meeting that wasn't supposed to happen. The Fed meeting was scheduled for March 18th, where a lot of people did expect a rate drop of this amount, but not too many people were expecting it at this amount of time. They're doing this to combat the coronavirus and its effect on the economy to further strengthen the US economy going forward. The United States isn't the only country, though, that is expected to cut rates, as many G7 countries are also expected to cut rates. They held a meeting and they all came to the conclusion that, if necessary, they will stimulate the economy and do what's necessary. Overall, though, the next meeting to happen is the Bank of Canada on tomorrow, where it's expected that they'll decrease rates by 25 basis points. The market currently has 100% priced this in. After that, it's the European Central Bank. Currently, the rate's at negative 0.5%, and that they expect that there's a 90% chance of a 10 basis points cut, going further into that negative rate territory. After that, we have the Bank of Japan on March 19th, where the interest rate is at negative 0.1%. Usually, they expect a 20 basis points trade, but overall, they aren't expecting a move. The Bank of England will go next on March 26th, where it's expected that a 25 basis point drop will happen. It's priced in at 98%. Overall, there's about a 30% chance of a 50 basis points cut, where the current rate right now is at 75 basis points. The virus continues to impact the world, with total cases reaching 92,835, with total deaths being 3,165. It's concerning to note that the spread continues to be largely outside China at the moment, with China only adding 126 new cases, while places like South Korea add a total of 850, Italy 460, and Iran over 800, as well as some other places spurring their results significantly, like Spain going up 45, jumping up about 30% overall. Deaths totals are increasing as well, not too rapidly, but it is worthy to note that in Italy they achieved there's 27 deaths, while in China there's only 33. As it seems like things could be improving in China, but it is always hard to say when you get news from China how accurate, especially with how controlled their media is. In Canadian news, things are starting to look slightly better with the CN Rail's workers coming back to work. So they laid off about 450 workers due to the rail blockades going on. So this is a sign that maybe things will start to slow down and start to pick up. Not too sure exactly how well this will go in the future. There does seem to be a deal kind of in place with Canadian government and hereditary chiefs, but overall, nothing's confirmed for sure yet. In South Africa, things aren't looking too well, where they hit their second recession in the past 2 years. So the past two quarters, they've had a negative growth rate. In Q4, the number just came out at negative 1.4%, and in Q3, it was at negative 0.8%. It's not too good news in South Africa. The main reason for this is that they're having issues in their with power supply. They have had widespread power outages as the utility down there isn't doing too well. Overall, though, in 2019, they had a growth of 0.2%, and in 2018, they had a growth of 0.8%. Overall, 7 out of 10 of the sectors contracted, with the biggest ones being agriculture, manufacturing, and transports. In 2020, they're only forecasted to grow 0.9%. Overall, hope things can turn around for South Africa, and I imagine if they can fix the issues with power, overall they should be able to pick up from their economy. In company news, Target announced their fourth quarter earnings. It was mixed results, with disappointment coming through their holiday sales to add on to that Walmart also struggled with. In total, though, their earnings were $1.65 per share, which is up from $1.52 the previous year. That is in line with analyst expectations of $1.65 per share. In revenue, they were up 1.8% to a total of $23.13 billion, though that is a slight miss on analysts' expectations of $23.44 billion. Overall, though, compound sales rose 1.5%, which they had strong online sales of 20% increase. That is pretty good news for them as more stuff is starting to move online as brick and mortar is struggling in certain areas. Though they were down 2.2% in pre-market trading and are currently down 4%. In Canada, there's a new IPO that's potentially going to happen with GFL Environmental. So essentially, GFL Environmental provides non-hazardous solid waste management and stuff around that. Overall, they plan to raise a total of 2.2 billion US dollars, with the selling a total of 75 million shares at $19. They also plan to issue 15.5 million intangible equity units at $50. These will give investors interest as well as have prepaid stock purchase in March of 2023 for about 2.45 and 2.6 subordinate voting shares. Overall, though, they did try to do this slightly last November, where they're planning on doing it, but they had to cancel due to not achieving the share price they wanted, as they were looking for in between the range of 24 to 20. They're actually looking for 20 to 21 this time and still had to slightly go down on their estimates. Another big acquisition is helping in the healthcare sector, primarily in the pharmaceuticals, with Thermo Fisher acquiring Quiagon, excuse me if I pronounced that wrong, for a total of 9 billion euros. Overall, they tried to do this recently, but it fell through as they couldn't agree on a price. In total, that they are going to pay 39 euros per share, which is a premium of 23%. Though they should be concerned to note that the past performance of this company, they were struggling, as this is the recent low, it'll be a 70% premium. Overall, they expect that they'll get synergies of about 200 million, and they expect growth rate of 6% from this company in the next 4 years. Though this article is interesting to point out that after tax return, they only expect a 5% return, while the cost of capital for the company is 7%. I'm a little unsure exactly why they would buy it, but personally, I'm not a big fan of most acquisitions as they seem to just destroy value if you watch, especially if you watch the company that makes the acquisitions stock trade relatively right away after the announcement and continue. Usually there is a decent drop. Um, Generally just doesn't seem to be worth a price, especially when you consider the premium they pay. Synergies never seem to exactly happen the way they want, but we'll see with this company here.